Good morning, everybody. Welcome to the Ankerstar Wealth Morning Update. Mike and Steve here. We've got some fun topics for you today because what's more fun than Nvidia crushing earnings and going up? They're over $1,000 a share now. So Mike's going to lead off talking about what happened with Nvidia's earnings. There's a couple of things they announced. He'll peel that back for you. And then, of course, at the end of the day, is it time to put money into Nvidia? I don't know. We'll see what Mike has to say. But that's going to be fun. But then also we're going to talk about some gloom and doom. And I've never met Jamie Dimon in person, but he's the CEO of JP Morgan Chase. I've gone up there to a deal before. I was hoping to meet him. Maybe Mike, who's going up there in a couple of weeks, we'll get to hang out with Mike and Jamie, talk the economy sort of thing. But he notoriously is negative. So even last year when I was up there, maybe it's 2 years ago, everything's going straight up, and the JP Morgan guys were all saying, hey, life is good. And then like on my phone, I can see like Jamie Dimon headlines of how life's over, right? So we'll talk about what Jamie Dimon's talking about in that stagflation. So a lot of people hear it. A lot of people go, well, it sounds bad because it's an ugly word, but I'll peel it back what that is for, what it actually means and why we're not going to have it. I'll give you my thesis on that. And then the last fun with words on a Thursday is called a Vibecession. So you've already heard about recession. This is Vibecession, so I'll tell you what that means. It's a much more positive outlook, I guess, depending on which side of the fence you're on. But I'll get to that here in a minute. But before we begin this financial education presentation, you have to do your own due diligence for acting upon anything you hear in this presentation. More diligence information is available at ankerstarwealth.com. The opinions expressed are Mike and mine alone. So with that, Mike, good morning. Let's hear about some Nvidia stuff.
Yes, Nvidia. Fantastic earnings yesterday. We're going to get into that. I thought I'd show you the green of the NASDAQ up 0.6%. And I thought I'd answer a question before people even ask it. Why is the Dow down 0.73% if Nvidia's doing so great? And what I thought I'd just show real quick before we get to the really good news is, overall Dow is a price-weighted index. So when these stocks, and there's only 30 stocks in the Dow, Salesforce, Boeing, McDonald's, when they're down, the Dow's down. And why are they down? Why is the Dow down? Because Nvidia is not in there. That's why they're down. So that's why the NASDAQ's up and the Dow is down. So how good did Nvidia do? It is incredible. And I'm going to show you their graph, their stock graph in just a few minutes. I will let Steve know that I sent a friend request. I finally,
Yes.
with this earnings out, I thought Jensen Huang, the CEO of Nvidia, has now qualified to be my friend on LinkedIn, right? He's like, oh, so I sent a friend request. I'll let you know if he sends me one back. I at least clicked that I'll follow him. So I'm thinking he probably will not because he's too busy counting his money and sending out these chips. They absolutely smoked it. I wasn't sure, 3 months ago, they exceeded our expectations. And the question is, how fast can they go? How fast can they go up? So what they came out with, $26 billion worth of sales, which beat the forecast by over $1 billion, which, obviously very exciting. Profits up 628% year over year, and revenues up 268%. So that means they brought in almost 3 times as much money and made 6 times as much money. Fantastic numbers for Nvidia. One kind of key thing is like, how do we benefit? How do, if you don't have an exact, you're not holding Nvidia in your portfolio, how are you making money on that? So I thought I would show something here that came out of their article that says their most important clients for graphics processing units are Amazon, Microsoft, Google, and Oracle. And within our portfolios, you have exposure to Nvidia through 4 different ways. Well, certainly Amazon, Microsoft, and Google. In the more aggressive portfolios, you'll see those straight out names. But then also JTech, the ticker JTEK, is high tech portfolio. The number 1 holding Nvidia. Number 2 is actually Meta. So you do have exposure to Nvidia. Let me show you the graph. So here, this is the year-to-date graph. And if you told me Nvidia could double from the beginning of this year and it's already, I think it's a $2.6 trillion company. It's almost catching Microsoft and Apple as far as how big this company is. It's the third biggest. You wouldn't think it could double this quick, and it certainly it did. And then if we go back even a year, you can see it's done a lot more than double. It's tripled in size. Fantastic company. But I really thought I'd look back and let's just look at the 5-year graph. So like, could you have bought this? So let me just take a quick glance at this. Back in the COVID years, when it dropped for COVID, this company went down to about $50 or $60 a share. And you'd be like, man, I should have bought it then. Oh, of course. Yeah, we can all look in hindsight and say, yeah. And it went all the way up to $200, $300. So it went 6 times bigger. But then look at this decline. And if you see this decline, you would have lost 2/3 of your value. So what I want to ask you, if you were in that, if we had put you in that, could you sit through losing 2/3 of your value? Because that's what happened there. It's a tough decline. And then what happened right in this time frame? Steve, I don't know if you remember what happened November 30th of 2022, the beginning of the AI revolution, right? ChatGPT gets released. Now, certainly AI has always been out there. My kids' Nvidia chips were known for their graphics cards, but that was the beginning, I think, a turning point where AI started to really take off and Nvidia really started to become valued. So anyways, that's where we're at. Would I rush out and buy it now? Absolutely not. I've seen these, like, the same question would have been in 2022. Would I have bought it there? It'd make me really nervous. And I can look at hindsight and say, of course I would have. No, I would not have. And it went down. It's like we want to buy things on sale, but we also don't want to make bad purchases based on FOMO. We are benefiting from Nvidia doing well, and I want them to. If anything, I see them, they're not a competitor to Apple or Amazon or Google or Microsoft. They're a someone that'll help them. So it's kind of like, I don't see these companies as in competition. They all benefit. So when the tide rises for these, all these ships go up. The one thing I will say is the companies that benefit the most are these large companies that we're invested in. I've read some articles on smaller companies where these chips are expensive and it takes some time to start recouping the dollars that they put into infrastructure. And, that's where the smaller companies, I wouldn't just rush out and buy them because Nvidia went up. So anyways, great news on Nvidia. We'll see where it goes from here. But, for today, we'll celebrate the green.
Yeah, absolutely. I mean, congrats to them, and what a chart, right? And so leave that up for a second, because you're right. Because when you hear we have Apple's our largest holding, and those have been with us since the beginning. Have held it for 10 years now, and obviously it rained, thunderstorms in paradise sometimes. But you cannot get look at this chart right here, a 10x return if you get shaken out of the market just because it goes down, right? So, every time Apple goes down, I get the, here come the emails and tests of, is it time to sell Apple? Is it over? It's like, no, it's still not, right? So same thing, you just got to be able to hold, have conviction, have a thesis on why you own it, and then have conviction in that thesis. If the thesis changes, that's when you sell, not just because the market's in and out. But I also wanted to say there's an interesting dynamic as I lead into my 2 topics from today. You can go ahead and bring that down, Mike, is when you see a big 3-day weekend like this, often one thing I didn't learn until I was in the industry is that it's really a 4-day weekend. A lot of people take that Friday off, i.e. tomorrow, when you're in the big bucks finance. We'll be working for you because we're not big bucks finance. Well, maybe I spoke for Mike there. I'll be working tomorrow. But yeah, so what can happen is what you saw this morning is the NASDAQ was up over 1%. A lot of people take chips off the table because a lot can happen in 4 days. Right. So, say some war, kinetic event happens or some big cyber attack or something. Anyhow, so you do see a lot of fading of markets going into a 4-day weekend. Not saying that's why we're fading today, but I would not be surprised if everything ended up in the red today, because we're kind of heading in that direction. And I wouldn't worry about that. That's just going into the weekend. All right, let's switch to Jamie Dimon, gloom and doom and stagflation. What does it mean, and why aren't we going to have it? So I'm on Investopedia, so that's your source. What causes it and why it's so bad? Well, it's the simultaneous. I'll go under key takeaways right at the top here. I'll highlight it for you if I can. There it is. Stagflation, simultaneous appearance in an economy of slow growth, high unemployment, and rising prices. Do we have slow growth? Yes, the growth is slowing. We don't have negative growth, but it's slow. Rising prices for sure. We had all the interest rate increases to kind of combat inflation. We made major gains there at the beginning, but still a little bit sticky, right? It's just kind of not going away, which puts the Fed, it makes their job very difficult, right? But the one where, well, I will contend we aren't going to have it is high unemployment. And I think honestly that's a thing of the past, and here's why. And I've said this before, and I may be wrong, absolutely, but I think today's different because Mike and I are of the age, still younger than half of the advisors out there. We need to point that out while we still are. But even at our age, you would think you lose your job, you pull out the resume, you spend 2 weeks redoing your resume, you start sending resumes out. It's like, oh my gosh, dinosaur, hello boomer, right? No, now it's boom, get to LinkedIn, click on who's hiring, reach out, have a vibe check, vibe call. I mean, you can be hired within 24 hours if you have those skills, which your group, just our generation kind of didn't, right? But now it's like, okay, boom, this is over, something else is going to start. So I think as the folks that are born with smartphones in their hands, they know how to work them, right? Because they're like the OG of that generation, and they can turn around and get back to work right away. So yes, even if even if Nvidia announces a 25% layoff, all those jobs, even though they're high paying jobs, they can be found elsewhere. I think that's how fast we are literally able to pivot, which is why I don't think we'll run into stagflation. But certainly if stagflation happens, it's not good for anybody. But that's what Jamie Dimon, who I believe is older than me, thinks is going to happen. I say no, we shall see. Who's right, Jamie or Steve? Get back to you later. Steve's been right a lot more than Jamie lately, just saying. Yeah, got a pretty cool job though that he does. So, all right, we're in a vibe session. So what in the world? So if we're going to make up names like like stagflation, let's make up another one because we don't have enough words out there, right? A vibe session. Now, this is an interesting title for what I do think is, they call it the wealth gap. Or you'll hear things called rich get richer. So vibe session, let's scroll down and figure out what that is. So it's the disconnect. The economy is strong, but yet not everyone is celebrating. So we'll get down here into what this means is I'll highlight the biggest paragraph here. So, all right, so the economy's strong, but who's benefited from that? Even in inflation, right? People, homeowners. If you're a homeowner, you are in the haves. If you are not, you are a have not. And that's getting worse because houses are getting more expensive, not just because they've inflated, which they have, but now money's more expensive with interest rates, which it is. Even when the money goes back to being cheaper, I don't see the house prices going down. If anything, they're going to get more expensive. And so it's tougher to get from have not to have, right? Which was our kind of American dream is you grow up, you either get a trade or go to college, you finish that, you go into the workforce and you navigate life, whether by yourself or with somebody, and then you try to buy a house. Right. Well, and you get rich that way. Well, it's worked out. Same thing with financial assets, which is the second part of that. If you are in the investor class and things inflate, your net worth inflates right with it. Yes, it's more annoying when McDonald's and Starbucks and Cabo Bob's are all more expensive. However, you can sustain that because you're part owners of several companies, right? Because you're in the investing class. So who gets left behind? It's the working class that aren't homeowners, that whether they're trying or not, they're paying rents, they're paying homeowners directly for that privilege. And generally then either small investors or haven't started investing yet. They're just trying to get a higher paycheck to make it all go away. So the vibe session is good if you are on the homeowner and an investor. It's not good if you're in the working class. You have a harder road to get to the other side of the fence there. So not to be gloom and doom there, but I do think, like I've mentioned several times, for those of us that have kids, entering in post college or post high school, entering the workforce sort of thing, really they need some mentoring much more than we did, to save up to 20%. We could save 10% back in our day. That number was fine. Now it's more like 20%. So really have to live below their means to be able to build enough assets to be able to switch into the homeowner class / investing class. So, all right. So cool new words out there for you if you didn't know: stagflation and recession. But I will wrap with, Nvidia hit a home run for all of tech today. So hopefully we shall continue to see the markets benefit from that. And with that, we will be back tomorrow. I should say I'm going to not speak for Mike anymore after that last reaction.
I'll be here.
But I think, okay, we'll both be back tomorrow giving you some more information. And with that, we will see you then. Talk to you soon.